From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for September 5th, 2016. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. And I'm going to highlight some of the key levels that we will look for entry and exit opportunities. Now, we do have a bank holiday here in the U.S., and I'm anticipating low trading volume. That being said, there's going to be no live trade room for the day today. We will pick up with some news in the U.S. overnight hours with some Australian rate data, and you'll want to be sure to check your financial calendars for the latest releases. Okay, let's get started with our analysis, starting here on the USD, CHF, the dollar franc. We're starting all the way out on the weekly time frame to get a wide-angle perspective of this currency pair. Take a look at the black box that's on the middle of the chart, the big black box here. You can see that this pair has been in somewhat of a range or, a balanced trend pattern here, as we see resistance at the top of the black box several times coming all the way back here into January and February of this year. It's found support down here at the bottom into the green shaded, the bottom of the black box, then rallied, fell, and now we're kind of in a rally phase here for the U.S. franc within the range pattern that we see here, the black and the blue trend lines that we see. And so the current blue trend line shows us the rising trend pattern. So that's the first thing I want to start with, because I want to keep that as a wide angle perspective. If it continues the uptrend pattern, if we see it continue higher, wouldn't be out of the question to see it back towards the top of the black box, which is into the mid to upper 9900s. We're looking towards 9950, 9960 into the top part of that black box. Now the bottom is all the way down into 9500. If we see any reversal, that could send it back there into the 9500 level. But very interesting that right now we are currently in the uptrend phase of the pattern that we've been in basically all year for 2016. Take it down to the daily time frame. There's our uptrend pattern. There's the blue trend line that was part of that uptrend pattern. We can see that Friday we had some, questionable data. We had some poor U.S. data with NFP, non-farm payroll information. It spiked quite a bit lower. We saw a sell-off of the dollar, went all the way back down into the low 97s, the yellow shaded area here in the middle of the chart, right down towards the blue trend line. Also touched into the 100 period simple moving average. So that's interesting. Touched all the way down there. The market bought back. The buyers dove back in right after that news and sent it right back up into the orange shaded area. So we ended off on Friday noting the fact that over the next few days, what we need to see is a breakout of this orange shaded area to give us a clue to direction. If it can break underneath it, we'll call it 97.90, but in that area, if it breaks underneath 97.90, we have a pretty good expectation that it will take a dive back down here towards the yellow shaded area. Now again, we have low trading volumes today with the bank holiday. 98.15 is the top of the orange shaded area, 98.15. So if it breaks above there, we then increase our expectation of the rise. The uptrend pattern continues towards at least the purple zone, if not even further towards the green and the blue zone at the top of the chart. So we have a pretty good expectation of what we can be looking for this week. If we see the continuation of the uptrend, break above the orange zone. Continuation of the reversal, breaks below the orange zone. Take it down to the 4-hour time frame, and as we get down here, we can see the congestion here. I'm not really confident in this breakout here. We've seen it pushing underneath the orange zone. While it could be our first clues that it's going to continue to pressure lower towards the yellow zone, that doesn't give me any confidence today. We have such low volumes for the bank holiday today. By the way, one in Canada as well. So that just doesn't give me enough confidence. What I'm going to need to see likely is the daily time frame with the breakout of this orange shaded area to give me some increased confidence. Higher volumes going back into tomorrow as traders come back into the market, and we need to see a breakout of that orange zone. That right there just doesn't give me enough confidence to say this is a push lower. Now it could. I just don't think that gives me enough confidence on a bank holiday to go ahead and dive into the shorts for the day today. So let's watch tomorrow, see if it can break out of that orange zone with some confidence. Getting back above it, we return for the buyers in the direction of what has been an uptrend for the U.S. franc. Take it on over here to the euro dollar. Similar situation, we have a wide angle view, weekly time frame, 2014 downtrend in the middle of the chart. Since January of 2015, we've been stuck in that large range, the red box down at the bottom, right-hand corner of the chart. Take it on down to the daily time frame. You know, we've studied this red box in the trade room quite a bit. We've been primarily in a downtrend pattern for much of 2016, as you can see along the green trend line. A couple of weeks ago, we challenged up into the 113s again, has come back down. Let's take it on down to the 4-hour time frame real quick. We see the data, how it affected the market on Friday, the rally, and then suddenly the reversal turned back lower and got back around the pink shaded area down here. Let's go back out to the daily real quick just to look at that pink shaded area a little bit more. You can see the market holding underneath it. 100 period moving average was right here into the yellow shaded area. It spiked up there on Friday's data, and then the reversal. For me, again, I think it's all about what happens going through the week. Not really today, but going through the week. I think it's very important that we are underneath that pink shaded area today and even going into tomorrow. That'll be a very important factor. We've been in a downward slide here. You can see over the past couple weeks a downward slide. Began a couple of weeks ago with Fed Chair Yellen's speech, but been in a downward slide. The data was unable to sustain the rise. So I think we're looking for this to return to the downside. Look at back here inside this black box where you see the blue circle, black circle. That indicates resistance into that pink shaded area. So I still think that this becomes a point of resistance here into the 1160, 1180 level. And we look for it to continue lower back down to the green zone or even the lower yellow zone all the way down here into the bottom, or maybe even the blue zone that happens to sit all the way down at the bottom of the chart down here. So definitely some downside expectation with Friday's price action. Now let's go back down to the 4-hour time frame. Take a look how it's just sitting within that pink shaded area and under it. I think that that's our first clue that we're not looking for. The buyers are not able to rally back again after Friday's move. We don't see the buyers able to rally it back above the pink zone. So staying within. Under the pink zone, which is 1160, we'll look for it back down towards 1100, and that's the green shaded area down here. And of course, underneath there, we look for the continuation lower. Now, all of that changes likely if it gets back above this yellow shaded area up here in the 1200 level. So we'll keep an eye out for that as we go through our week on the euro dollar. Moving on over to the GBP, take a look at this range. This is the daily time frame. Of course, we had the Brexit vote candle back here, but since then, we have found this black box, this range here. Probably most important about all of that is where we are right now in relation to that range, that black box. Take a look. The top of that black box right there into the 33, 40, 50 level, we have found resistance there. Let's zoom it in one time. You can see, look at that black box. Look back here where the blue box is. Look at the resistance back here. Look at where we are right now. Unable to break through the 33.50 level. Let's zoom it in one more time here on the daily time frame. And I'm just going to try and scroll it back just a touch so we can see some further history here. So there's our right-hand side. There's our current candle. Look back here on the left where we see resistance into that pink zone. Unable. No open and close. No single candle body that opened and closed above 33.40 since getting underneath it. So that's very important. So for me, as long as it's underneath that, I'm very discouraged about going long. In fact, I'm watching for evidence and clues to reversal here as long as it's underneath the 33, 40, 50 level because we don't see the breakout above there. Remember, each one of the shaded areas on my chart has two potential outcomes. It's either going to break through it or it's going to bounce off it. And currently, we have not broken through that pink shaded area. Take it down to the 4-hour time frame. Look at the price action we're seeing around this pink zone. A rally, a fall, a rally, and now we're seeing a pretty decent engulfing candle trying to jump back down into or just underneath this pink shaded area. Let's keep an eye on this over the next couple of days. If it can break back underneath this pink shaded area, I'm trying to get that arrow selected there. If it can break back underneath that pink shaded area, I think we're looking for a reversal once again for the pound dollar, staying within, again, that long-term range, that black box that we just studied. Getting back under the pink zone, we're back into the 3250s, 3230s, which is the green zone, and lower from there. We'll watch for further evidence of reversal. The only reason we start buying this currency pair is an open and close on the daily time frame above 33.40, 33.50, above the pink shaded area on the pound dollar. Moving on over to the USD CAD, we see again somewhat of a range. The black box that you see here on the chart, resistance at the top, support at the bottom, multiple resistance at the top and support at the bottom. We're right smack in the middle of that black box, and that range has basically been in place since the beginning of May of this year. We've seen the fall, we've seen the rally, we're now seeing a fall phase. We had good news out of Canada with trade balance on Friday. At the same time, we got the NFP. We saw oil take a rise on Friday. So all of that, oil rising, Good news out of Canada, bad news out of the U.S. gave this a pretty decent fall on the U.S. CAD on Friday. We're right here into the 100 period simple moving average and the 1.2925 level at the in the blue shade area in the middle of our range. So what's it going to take? Let's go ahead and zoom it in one more time. If we continue to see good news coming up this week out of Canada, bad or poor news out of the U.S., and we see oil continue to rise, we'll look for the breakdown of this blue shaded area and the continuation lower within the momentum that we began with Friday. If it can't do that, well, let's talk about oil reversing and going back down, which is at resistance right now, by the way. If oil reverses and goes back down, if we get some poor news out of Canada and some more good news out of the U.S., especially if we hear more news about interest rate changes coming up before the end of the year, we could be looking for support and this to turn around and go back higher. So all of this hinges really right around the 29.25, 29.50 level. Let's take it on down to the 4-hour time frame. Here we are kind of toying around with it today. I'm not confident in the breakout lower. I'm not confident in reversal yet. So this one, to me, is just kind of a sit and wait and see kind of pair for the day today. Here's something interesting. Take a little trend line like this. Just connect the last two lows with the last red trend line, and we're there right now. So I'm very cautious about going short, especially, like I said, if oil finds resistance. Let's just take a quick peek at that U.S. oil chart. Look at that, finding resistance underneath 100 period moving average and the 47 level here on U.S. oil chart. So if oil finds resistance and goes back down, that again means that we could be looking for a rally once again here for the U.S. CAD. Take it on over to the U.S. yen. Of course, long-term daily trend line. Look at that blue trend line here. We have been in a downtrend for a long time. We've seen 1, 2, 3 times touching the blue trend line, and now the 4th time touching that long-term blue trend line here. So very cautious about buying this currency pair, that's for sure, into that long-term blue trend line. Take it and zoom it in like this and take a look at that. I mean, you can see challenging the last 3 days into that long-term trend line, unable to break it. We even see what could end up being a reversal candlestick and a bearish engulfing candle here. We have to wait for the end of day today to see if that ends up like that. But look at that. Taking a look. Falling off of the orange zone. So if you're a seller, if you're looking to sell it, back at the orange zone obviously would be the best place to sell it. But I think your next thing is you're looking for the breakdown underneath this green zone, which is 103.15 or so. 103.15 is the bottom of the green zone. You need to get underneath there and likely back down towards the low 102s, the yellow shaded area that sits down here. And I'll try and get that pulled over as well so we can really get a sense of where the market will go once it breaks down through the green shaded area. So we'll look for it back down here into the low 102s. But it's going to have to get underneath 103.15 for me to have any confidence. Look at this. 1, 2, 3, and now the 4th day settled out here into the green zone. 4-hour time frame. There it is right there. There's your little green shaded area right here. Let me pull that over as well. It will need to break out underneath there. If it does, opens and closes underneath there, I definitely think we're back down into the low 102s. But it has to do that before that happens. By the end of day today, if this turns higher again above the green zone, challenges our orange zone, if any time it breaks above this orange shaded area, we could be looking for the return of the upside. So really watching this green zone today to see if we see the breakdown to go lower, which it hasn't done for quite a long time, even with the Friday data. So a breakdown to go lower under the green zone or staying within or above it, we challenge back to the orange zone or higher for the U.S. yen. Taking on over to the AUDUSD, as mentioned earlier, we do have some rate information out of Australia. It's listed as 12:30 a.m. Eastern U.S. time, 12:30 a.m., which is Tuesday morning, by the way. We have that rate information out of Australia. You'll want to watch that if you're trading this. Long-term trend line, red trend line, very important. As we go down into the smaller time frames, you can see it's bounced off that red trend line over the past couple of weeks and has made a return lower. We're underneath the green trend line, the rising green trend line. We're underneath that right now. I think that's very important here for the Australian dollar. So we bounced off the long-term red trend line. We're underneath the green trend line. So very important here for this currency pair. Take a look at that. We've connected the lowest low, this low here, and the market is underneath it. Take a look at the pink zone. Blue, green, red circles back here on the left, showing us historical price action around this pink zone. That's 75.80 to 7,600. So as long as we're under 7,600, let's say, there's a good chance we find resistance for the Australian dollar and we turn back lower. Again, I think it might hinge on that rate information we get out of Australia today or early tomorrow morning. breaking back above 7,600 will probably take another run at the blue shaded area and the red trend line here for this currency pair. So you might want to wait to see what happens with the rate news. Any turn lower, if it causes a market turn lower, will challenge the yellow zone again, which is 75.15 or so. And of course, anything underneath there will look for the continuation of the reversal and the downward slide here for the Australian dollar. So very interesting area right around 76. I definitely wouldn't buy it right now underneath 76 because we've seen historical resistance here. We have the underneath side of the green trend line. We've fallen off the red trend line. And again, we have that rate news coming up later today. So 7,600, key area. 4-hour time frame, again, is challenging it, unable to break above it right now. Definitely wouldn't buy it unless it opens and closes above the pink zone 7,600. Definitely not a buy scenario. In fact, watching for clues to resistance and reversal, I think, will be your key point for the day today on the Australian dollar. And lastly, moving over to the NZD/USD, top of the range. Take a peek. Let's zoom it out again a couple of times. We're on the daily still, but take a look at the blue box top right-hand corner of the chart. We're in the resistance. We go into the blue box. You see the blue box here. We start to see some more detail with the black boxes. We zoom it in one more time. Take a look. The pink shaded area, the black boxes. We have found resistance 73.25, 73.55 for the past several weeks. We're going back into June, finding resistance here. So unless it breaks above that 73.50 level, I am not buying this. Too much resistance here to buy into that pink shaded area. That is resistance. It's clearly a price barrier that the market is having a difficult time breaking through. So buying underneath the pink zone, just not going to be something I'm looking for. Watching for resistance and reversal could be an opportunity. Intraday bounces off of the pink zone could give you some opportunity for resistance and some scalping opportunities to go short again. But buying this pair just doesn't seem like a logical opportunity until it breaks through that barrier into the mid 7,300. Zoom it into the 4-hour time frame. You can see what's been happening over the past several weeks. We challenged it here, unable to break, went on the way back down. Challenged it Friday, unable to break, went back down. Challenging it today, unable to break so far. So again, I think you're leaning towards the short side right now for the New Zealand dollar. The only reason to buy this is a break above the pink shaded area, targeting the orange zone, targeting the green zone, and of course, if any time it breaks under the green zone, we look for further reversal here for the New Zealand dollar over the coming weeks.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.